Good morning, everyone. Am I audible? Good morning. In terms of ABFM, we are going to start with another topic today. Acha everyone, today is 15th. That simply means the registration time is yet to be, hardly the last week is left. So it's way better if you haven't filled up your forms, you should fill up the forms as early as possible because the time is ticking away, right? Since the time is taking away very fast, it's way better that you finish off your topics as early as possible. You fill up the forms so that you don't face any problem later on, isn't it? So these are today we'll be talking about the capital investment decisions only. Capital investment decisions were when we look at the assets are really costly. And at the same time, what are the benefits that we are reaping out of it? That is again very, excuse me, difficult to look upon. So in this case, capital investment decisions are those decisions which are related to buying of an asset or selling of an asset. है ना? Okay. We are buying an asset, we need to know what would be the inflow of it, isn't it? If after a certain period of time, if I put 10 lakh rupees and I don't get more than 10 lakh, then what's the fun of it? If I put 10 lakh and I get something out of it, that is something I can say, nay, this is good. Now, let's talk about capital investing decisions. Investing decisions, when we look at the question, first is incorporating flotation cost. What do you mean by flotation cost, everyone? In this case, I am including both. Flotation costs here would include everything that we relate to the area of the costing. Acha, the chapter international portion is also included in this because international capital investing decisions and the normal ones, they are all included in this. ठीक है? Now, if we talk about flotation costs are those costs which are required to be incurred when we talk about issuing the particular thing to the market. When we are issuing any product in the market, if you're trying to raise money now, so obviously every organization has to do this. Then when they are trying to raise money uh, from the public, they will have to incur certain expenses. Those expenses would include the area of documentation expenses, that would include the area of documentation, then legal expenses. All those expenses are required to be incurred. Without that, you cannot raise money through the public. So what will this flotation cost do? This will have no effect on PV, increase the net present value, increase the project rate of return, or increase the initial cash flow of the project. See, flotation costs are required when we are trying to raise money. है ना? That means earlier maybe I was thinking to spend 10,000 rupees. Now I have to spend way more than that, isn't it? So in this case, the correct answer would be we are having an increase in the initial cash outflow of the project. See, if the cost of capital was defined and we have flotation cost, it will increase the cost of capital even. If I said that I would be spending rupees 1,10,000 on this particular machinery, now they say we will have outflow of cash because of flotation cost. The cost is going to increase in terms of the money that we are spending, no? It will increase the amount, not decrease. Next point. With limited finance, a number of project proposals at hand, select the package of the project which has the maximum NPV, IRR return is greater than the cost of capital, profitability index is greater than unity, or any of the above. Everyone, we are looking forward to deciding one particular project only, na? Technically, we can choose, these are three different methods and all of them showing positive signs. The maximum, but if you have to choose one of them, the strongest is the maximum net present value. This means we have the strongest portion of profit, which helps the business to grow further. So in this case, if I look at the answer now, then we are trying to look forward to it, then the correct answer would be the maximum NPV. Okay? The answer would be the maximum net present value. Maximum NPV means, maximum NP would mean that the inflow and outflow. If I look at outflow is done today, and PV of inflows is something which we have to calculate. That is for tomorrow. So when you deduct these two, your inflows from your outflow, it should be positive. And the maximum positive means you're getting the maximum benefit out of it. Done. Next point. A profitability index is of rupees of 0.92 for a project means what? The project cost or cash outlay are or is less than the PV of the project, NPV is greater than 0, NPV is greater than 1, or the project returns 0.92 in respect of the present value of each rupee invested. If I look at the profitability index, what's the formula for PI, everyone? And this is among the modern methods. In this case, what we do is we find the PV of inflows, whatever money we'll be making from this particular project, divided by our initial investment. How much money can we recover from the area of initial investment? If this means that the project returns 0.92 in the PV, when it is like this now, I don't think I'll be able to take the project, because if I put 1 rupee and I can get 0.92 back, that means 0.08 is something that I'm losing. And losing money definitely hurts, That is why if such a situation comes, if the PI is less than 1, we should not accept that kind of project. Now comes capital expenditure decision. Encompasses the decision relating to independent investment proposals or mutually exclusive investment proposals contingent investment proposals or all. Capital investing decisions have three kinds of decisions. We can have choose one. We can have a situation where we will look forward to the fact one is choose one is to accept or reject the only one that we're talking about, and we can have a decision of allocation. Allocation means the project is there and we have two, three different options, and we choosing one means choosing the one which has maximum benefits. Then the second one would be we are not choosing one. We can allocate the funds to any one of them. That is choosing one. But if we have got 10 lakh and we have to divide it into these three, which one has the maximum benefit will get the thing. ठीक है ना? Done everyone? Independent investment proposals, mutually exclusive investment proposals, contingent investment proposals are all of the above. In this case, all of the above would be chosen. ठीक है? All of these are covered under the capital investment decisions, be it international or be it national. It's all the same. Done everyone? Okay, now let's move on. When choosing among mutually exclusive project, matlab we can choose only one. If there are multiple even, then we can choose only one. What should we choose? Longest payback is preferred, higher NPV gets selected, quickest payback is preferred, or lower cost of capital will be selected. In this case, when we're looking at mutually exclusive, we have to find one which was the best one. Lower cost of capital, longest payback. Longest payback should not be chosen. The one which takes the maximum time, why should we choose it? If I've taken a loan or something, then that particular person will kill us. Kare, why aren't you not paying yet? So this is not something that we can choose. Higher NPV, yeah. But why not highest NPV? If there are multiple projects, then why not highest? Then quickest payback, this can be taken up because the one which is taking lesser time to get the money back, we can choose that one. The quickest payback is preferred. With limited finance and number of project proposals in hand, select the package of the maximum project which has maximum NPV. Again, we have limited amount of money. We can say that this is after this we don't have money. We're sorry. Then internal rate of return is greater than the cost of capital, or profitability index is greater than unity, or any of the above. Even if I have limited finance there now, I'll still look forward to something. Though any of these is fine, but if you have to select, then you will have to go for NPV only, where the NPV is maximum. Though every among these is a positive sign again. The maximum NPV should be chosen. Okay, after this, what next? When evaluating an international project, we are not looking at a project which is national, but international. Why is it important to consider the cultural differences in the host country? It is very important, everyone. Let me give you an example there. McDonald's came to our country. When McDonald's came, it came with beef, it came with pork, it came with turkey. They introduced the best of their food. They were making good money in the international business, and when they introduced the same things in our country, they failed terribly. They had to leave our country. And then they came back. When they came back with the basic things that Indians love: chicken, paneer, make aloo tikki, barely for 25 rupees. They introduced all these things that way. You need to understand when you are coming to a country, if you do not respect their culture, you cannot blend in the country. Isn't it? That is, beef is not eaten by Hindus, pork by Muslims, turkey, something which is not available in our country, so most of the people do not have a taste over it. So in this case, ultimately, this particular organization could not work in our country the way they wanted to. So basically, this is not related to the estimate of exchange risks. You know about the currency. Payback period is not the point. You don't know about it. To assess the market potential, it can be the point. But to mitigate the operational risks, when you're trying to operate in a country like this, you can face a lot of problems. So in this case, it is to mitigate operational risk. है ना? Which financial metric is used to assess the efficiency of an international project in generating profit relative to its cost? That is return on investment, internal rate of return, accounting rate of return, or payback period. Okay, so what would be the answer according to you? Financial metric which is talking about efficiency. Technically, all these methods are used, but which one are they talking about? Efficiency of an international project in generating profit. Oh, the question is talking about the profit. It is not about the excess money we are getting, anything else. Payback is related only to the money. You know? Then we have the area of accounting rate of return. Whatever returns you are making out of it, IRR talks about positive or negative NPV. At IRR, the NPV is 0. Since they're looking at the profit portion, this return on investment. Whatever extra money you're getting, divided by total investment. Done? Okay, so this is it for the day, everyone. Now we'll be meeting for our special classes tomorrow, as well as then we'll be continuing with the same timing on Monday. If you haven't checked out our courses yet, what you can do is you can look out for our courses. Let me show you where to go. You can go on to www.adda247.com. As soon as you go there, in the area of JIIB and CAIIB, go on to the area of CAIIB November batch. The November batches have started. I think ABFM has just started. Hardly a few classes have been done. Module A have just started. So if you're looking forward to it, then kindly join in time. ABFM is the new subject that has been included. We have got Sankalp batch as well as Mahapak. The benefit of Mahapak is that you will get all the electives in this. Every elective is there, so you can choose your elective. While watching the particular classes, you can determine which particular batch you would like to take. While if I talk about the batches there, English medium plus the portion of the bilingual batch, everything available, ebooks, test series, everything included when you take up CIB Mahapak plus revision batch. ठीक है? So if you're looking forward to it, use the code PREP76